UWC Berhad was founded by Dato' 𝗪𝐶𝐰𝗋 and 𝗢𝐶𝐰𝗋 in 1990. The company is an integrated engineering support service provider specializing in metal fabrication. They provide services like cutting, forming, joining, and other associate processes to produce intermediate metal products, which are components used by their customers in the semiconductor, life science and medical, as well as heavy equipment industries. They also provide assembly services where they assemble the intermediate metal products produced by them into finished goods based on their customer specifications. Some of the countries they sell to are Malaysia, representing 62.8% of the total revenue, 30.2% comes from Singapore, followed by the USA at 2.3%, China 2.2%, France 1.1%, the Netherlands 0.8%, and the remaining 0.6% come from the other countries. For more information, you can visit their website at www.uwcberhad.com.my. UWC had achieved a marvelous revenue and gross profit growth since IPO, thanks to many new and high orders from their customers in the semiconductor and life science industries. Not to mention, the company is benefiting from economies of scale with better capital utilization and production efficiency, justified from the growth of gross profit higher than the revenue. Also a strong operating profit growth, increasing 205% over the years, attributed by lower operating expenses. Overall margins are steady and growing at double digits. A large drop in OPM and NPM in financial year end 2017, with high remunerations awarded to their employees. A good sign that management appreciates their employees' hard work. A bumpy ROIC, however, it's growing at double digit. Although it is preferable to compare these numbers to their competitors as well as the industry's benchmark to gauge their position. As you can see from the slide, there's no remuneration data for financial year end 2016 to 2018. So far, the management is conservative with their salaries and bonuses. The company was initially incurring net debt, but it was for their business expansion. Starting from financial year end 2019, total debt starts to reduce while cash grew massively. A healthy operating cash flow, although inconsistent. In financial year end 2017, the operating cash flow dropped 78.9% as a result of increase in payment for their purchases and payment to directors and staff remuneration. No data available for their dividend per share from financial year end 2016 to 2018. Nonetheless, when they start distributing dividends, the amount dropped in the following year. A bumpy free cash flow growth. UWC incurred negative free cash flow in financial year end 2017 in line with lower operating cash flow and higher capital expenditure. A large uptrend starting from financial year end 2019 thanks to high operating cash flow achieved during those years. No problem with the dividend payout as UWC has ample amount of cash reserve. Overall, I rate their company 2.6 out of 4, which is about 65%. A B- company in my humble opinion, even with the explosive growth in revenue, profit, and cash flow. That's because I'm uncertain if the high growth is sustainable, especially for their cash flow. You can judge based on their previous data in financial year end 2016 to 2017. After analyzing their financial data, here are my thoughts. Number 1, there's a risk for UWC as 82.4% of their revenue are heavily contributed by 2 major customers. Hence, it's important for UWC to maintain close relationship with them unless they can expand their client base to minimize this risk. The second pointer is UWC's inconsistent operating cash flow, which was illustrated in the previous slide. The company needs to improve their cash flow management, especially the working capital. Lastly, I feel that their share price had risen way higher than the growth of earnings. I believe that the company is in a tight spot where they must deliver record high earnings in the next few years in order to keep up with their current valuation. Otherwise, things wouldn't look too good for UWC. That's all for today. Hope you guys enjoyed this analysis. If you did, make sure you smash the like and subscribe button. What company should I analyze next? Let me know at the comment section down below. With that said, I'll see you in the next one. Fearless.